Greetings, Dr. Jeffrey Scott here. This is my weekend market update for November 19th, 2023. Sorry for the lateness of this. I was at a family event in the Northeast, got home late, so I'm doing it now. Title this, Broader Markets Join the Rally as Dollar and Rates Fall. My email address is hgsidoc@gmail.com. If you have comments, please email me. I will respond to you, or leave them in the remarks section on YouTube. If you're new to my channel, really love for you to subscribe. It's free. Just hit the subscribe button on YouTube. And if you hit that alarm, you'll get notified when I put these up. All right. So let's show you how the broader markets join the rally. This is for educational purposes only. Anything I recommend is spirit of education and not investment advice. I do have a series of indicators and scanners that I built for a number of programs. You'll see today how I use them in wealth charts. If you have questions regarding wealth charts, TradeStation, TradingView, or any other things that I show you, the Sagar's tools, please email me. I'll be happy to respond. I like to use the things that work for me, and I like to show people how to use them. So this is for education. Doctor, not a broker. I'm independent, and trading involves risk, and you alone are solely responsible for any investment decisions you make. If you like these videos, check me out at stocksanddocs.com. Something I do on most mornings, actually gets posted in the morning. You'll see that based upon my work schedule, I'll either do them the night before or early that morning. Great week last week for the bulls. We've been bullish over here. You can see the Russell was up 5.4, the ARKK was up 10. This is over the 5 days. You can't say anything but wow. Even the IBD 50 ETF, which has been a horrible laggard, it is still significantly 16% off the 52-week high, was up on 3.5%. So even though Friday was a softer day, the diamonds were down a tad. The markets finished up well, and it was a good day again for the Russell and for the ARK. S&P 500 sectors were all up on the week, led by real estate. This is Sagar's Q Breadth tool. It requires Metastock data to run. It's a great real-time picture of what the market's doing. Now this is different than the last chart because this one actually uses S&P 1500 sectors, so there are more stocks in them. And you could see on Friday all the sectors were up, and you could see 100% up, 83 industry groups, and 74% stocks were up. If you look over the 5 days of this week, 100 sectors, 97% in industry groups, and 89% stocks. One of the strongest weeks I can remember in a long time. So strong that it's even put the month to be very positive, 91, 60, and 61% respectively. I'll talk about this with the bucketology slides, but let's just say the market is not overtly overbought, and 84% of the stocks above the midline of the Bollinger Bands is certainly bullish, but it can get much more bullish. This is another Sagar tool called Q Market Breadth, and what I'm really looking for are signals, and these dots here are signs of bullishness or bearishness. You can see a list of the different indexes that we're tracking, and all you see over the last couple of weeks are blue dots. That's strong, and this one here is small cap versus large cap, and notice how small caps have turned up some. This is from Nick Drendel. It's one of the other displays that I'll have working every day in the market. And what I like about this one is it has real-time updates of price change in the market on the day, and it's updated real time. It shows you where you close. Look at ARKK up 3.5% on Friday, closing at the 98th percentile. You gotta love that a lot. You can see everything is above their 50 here. You could see down here, biotech, retail, energy were the leaders, medical mining on Friday over 5 days. Look at this, biotech was up 8.5%. Yeah, we've been talking for a while that biotech looks ready to emerge, and it certainly does, doesn't it? Would that be interesting? Biotech has been dead since the beginning of 2022. Rates eased on softening data. You could see 10-year down, 30-year down. What happens when the rates drop? Of course, the S&P goes up higher. Recession in our near future? I don't think so. I think that we're about to enter an election year. When you figure that everybody in the House is running, plenty of senators are running and the big guys are running, the presidents. Who wants to see us go into a recession? So even though we've had an inverted yield curve, notice that the recessions in the gray bars occur after the yield curve comes back. So I do think the yield curve will uninvert before too long. I do think we'll ultimately have a recession, but I don't think it's in our near future. Evidence of that is I see no evidence of credit tightening, or the Philadelphia Diffusion Index is above zero point 0.2, and that's typically when you stay above zero point 0.2, you don't see a recession. So you have economic activity. Goes along with the argument of a soft landing. Stocks above the 200, stocks above the 40, 12-week new high, new low. All of these improved on the week, but they're not overbought. Here's the buckets, 83% of stocks in the S&P 1500 above their midline. And imagine if you took the Bollinger Bands and said the bottom one is 0, the top is 100, you could have 10 deciles. So each of these, except for the two outside ones, are where the stocks are within the deciles. And you could see that most of the stocks are up near the top of their Bollinger Band. In a bull market, stocks will bounce between the top of the band and the midline. Now, when we're overbought, we'll typically have a lot of stocks greater than 1. When we're oversold, we'll have a lot of stocks less than 1. So right now, I can say that we're not overbought to the point of extremes, but it's a very bullish looking picture. Keeping with the bullish theme, notice that on both the NASDAQ here, new highs, 52-week highs, on the NYSE 52-week highs, and the new lows are lessening on the NASDAQ, and they're lessening on the NYSE. And then this has taken all the stocks that I would trade, so price 2.5 and volume 250,000, those are just my basic parameters, and assign them to various groups based upon ERG. ERG is EPS rank plus relative strength rank plus group rank. And the most ERG can be is 297 because each one's 0 to 99. And what you see here on this past week, the stocks with low ERG outperformed. Now everything's above 0. It was a super strong week, but we're seeing laggards lead, market rotation, especially when you think about those small caps. Know your news and earnings. Now on the right you can see we still got plenty of earnings. NVIDIA, boy, that's going to be watched. How about Zoom? Lowe's, Best Buy, Dick's, Burlington, Abercrombie & Fitch. So there's a lot of earnings this week. So even though it's a quiet news week, it's going to be one that's interesting for the earnings. And then if you look over here, you can see economic indicators tomorrow, Monday, Richmond Fed. Tuesday, some home sales, minutes of the FOMC. Jobless claims on Wednesday, durable goods, sentiment. Thursday's a holiday, happy Thanksgiving in advance. And lastly, Friday, some PMI. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So markets rose again, as I showed you, broadened out, IWM and ARC led. Pleasing results on CPI, PPI, retail sales, housing starts, jobless claims. IWM is about to go to a buy signal. The others are already there. So when my model says you're in a buy signal, that means I will commit funds to this market and I'll continue to add positions until I get full or the market starts to tell me otherwise. So let's go to the charts and take a look at what we have in the market. Here's my weekly timing model. If you've not been here before, I put two things on the charts, a 30-period WMA and my proprietary bongo indicator developed by myself and 5 or 6 friends. So proprietary to a number of us. When we are above the moving average and the bongo's green on a weekly chart, that's a buy signal. So we went buy at the end of the week last week. So last week was a buy on the spider. We went a buy last week on the Qs, a buy last week on the diamonds, and we've got the bongo, but we still haven't closed above the WMA, but we're very close on the Russell. A positive day in the markets will, excuse me, and the markets will flip to a buy on all four of them. If we go back and look at the indices and we look at the market, this here is the 13th, which is last Monday. You could see the stocks open down and close kind of where they were open. And what was happening? We were waiting to see the news. Then Tuesday, the PPI came out. The market loved it. It ran up. You could see Tuesday it closed in this area here. Wednesday on the PPI it popped again, but really the market traded sideways the rest of the week. So this was a case where most of the news factored in on Tuesday with that information. Now, if we look at the SPY, you can see what happened on the week. Um, Gap up on Monday, actually Tuesday. Monday was a kind of a nothing day, down a tad. Tuesday, great day, and then traded a little higher the rest of the week, but most of the work was done. This was when we broke above here, or we started heading up. The question was, would we fail and go to new lows, or would we break out and go to new highs? Well, we're certainly doing this right now. We've broken above resistance. MACD is extremely positive. We are not so overbought that we're going to correct. So right now, it certainly feels to me like this market wants to go higher. So Spider looks good. Q, same thing. Gap up on Tuesday, drifted higher the rest of the week. Most of the work was done on Tuesday before the market opened. Diamonds, the same picture. Now the Russell's interesting because the Russell had this amazing Tuesday, up 5.49%. Then on Wednesday, it failed at the 200, and that's got to be concerning because we're going to have to get through that to really make a difference. But you can see it failed at the 200 with a shooting star, had an ugly day on Thursday, and then Friday was a positive day after a gap up. So net, you look at a weekly of the IWM, and it's a pretty good looking chart. But there was a lot of stuff going on during that week, but feel pretty good there as well. You'd expect the VIX to drop down. Just look at a weekly on the VIX. You could see the VIX was down on the week, 2.6%. And part of the good news on this market was the dollar dropping out of this box and drifting lower. I've been saying for weeks three things needed for this market to rally. One was the dollar to weaken. The second thing was the 10-year. And the third thing was oil to stop going up. If we go and look at commodities, let me just link this to my Tasty Trade so we can get the rates working in a second. There we go. So you could see here on Friday, gold eased just a penny. Silver eased a bit. Oil has traded down to the 200, trying to bounce there. Of course, you had a meeting with the Saudis and the Iranians, and they're talking about maintaining cuts and maybe even reducing production. I'll tell you, they're nervous. And they're nervous because they're concerned about economic slowdown in the world and how that economic slowdown might impact oil utilization. So I think there's a lot of reasons why this has come down, and a lot of it is probably tied to world economics. Natural gas has been dead to me for months. I joke with that all the time. And then look at the 10-year breaking out of this pattern here, dropping, not holding at the 50, and drifting down like the dollar. So there's the three things that I was looking for. I was looking for weak dollar, weak oil, and weak 10-year, and we have gotten them. If we look at the sectors leading the market, last week it was all about technology and the FANGs. And we look this week, we can see biotech has broken above this trend line, but I think you almost have to move this trend line after some of this damage. So dollar, it'll be interesting to see if biotech can rally here. Again, I'm not kidding. I've nibbled on some LABU and stuff. It's really cheap, and eventually biotech's going to join the rally. You can see that materials is trying to come up. Communications is well off its highs. Energy is well off its highs. Financials, maybe trying to do something. Not so much on industrials. Staples, weak. Um, XLV to Spider, horrible. So when you look at the major industry groups or major sectors rather compared to the spiders, still looking at technology as the leading place. If we go into the stock scanners, let's go take a look at the heat map for the S&P on Friday. Now, Friday was a flat day at best, except for the Russell and the ARKK. And you can see here the red showing just that it was a flat day, except for the Russell, and a mixture with a lot of big cap tech were down. If we go to Wealth Scanner, which really turned positive last year, and we look at what's leading, ARC, Next Generation Internet, SMH Semiconductors, and I don't know why my line didn't stay, but last week we did something around here. There it is. And you could see how we broke out of trend lines there. A lot of stocks look that way too. Russell 100, 1000 growth. That's pretty impressive. You take 1,000 larger stocks growth, FANGs, ARC Financial, Software, Qs, Momentum ETF, FANGs, Semiconductors, Home Builders, Latin America, Construction, and notice each of these is above 800, heavily weighted to technology. So you've got 10, 12,000 instruments you can buy. How do you pick which one to go for? So what I like to do is I like to scan. So what I have built is a scanner within Wealth Charts, and this scanner allows me to scan for patterns. The pattern that I like to scan for are stocks that meet my price and volume criteria. I put greater than 0 for options liquidity because it's nothing about liquidity, but I like to trade options, so I'm specifically asking for stocks that have options. I'm looking for at least one bullish signal and no bearish signals. And I'm looking for turnarounds. I'm looking for that daily bongo, which is my trending indicator, have flipped from negative to positive within the last 9 days. Why? Because I don't want shooting stars that are getting stretched. I want things that are setting up to run again. Pullbacks in an uptrend, pull back to support, and then move with momentum. Daily bongo, daily weekly are both bullish. So that is my go-to scan. And let's just look at XLK and see if we see anything that's interesting in the XLK. So let's go to technology here. Now, the problem is a lot of these stocks have run already. So GLOB, here is one. I don't know anything about it, but it's on my buy watch list. And why? Here's a stock that has been going sideways, but it broke out on Friday, clearing the 50-day moving average. Here's my EMS signal, which fired, my early signal, which fired a couple days before. Look at the volume on Friday. So I've got a gap, a volume, a breakout in momentum, rouse to strength, and OBV are super strong. And if you look at the if you look at my high jump bar, it's 87, so it's not overly extended. So this is top down at its greatest. Market says buy, Qs are doing well, technology is leading, and here's Globan. NetEase is another one that looks good. Now this one has run a lot, and it's about similar extension, 83. Would have been a nicer time probably to start looking at it back here, or how about back here when it came out of the squeeze. But even though it's run a little bit, you can almost argue that it's been a cup, handle, and a breakout with a gap, breakout momentum, relative strength, and OBV look good. Daktronics has been on and off my interesting list over the last couple of weeks, and we could see that Daktronics continues to do well going higher. So that's one way of looking. Now I also put together a list of stocks that made it to any of my scans on the long side or some of the lists that I follow closely, and I call that my combo buys list. So let's take a look at my combo leaders and see what comes up to the top. So there's Globin. Gap, retail had a good week. The earnings growth on some of these is pretty impressive, and you could see Gap with a massive volume breakout from Gap volume, breakout momentum. Look at relative strength in OBV. It's starting to get extended short term, but I think Gap looks interesting here. Don't know anything about this, so I'm not going to say anything about it. Ross Stores. Now, there is an earnings indicator here. Um, I know that Wealth Charts had a had a technical issue, so the earnings aren't placing. I've been told it will be fixed soon. But this has already had its earnings come out, and you can see what they did on earnings. They did a nice gap up on volume, and that is Ross Stores. EC is an integrated oil, a European integrated energy play. And if we take a look at this, you could see, again, a bit of a sideways move, but a breakout above the 17 and 50 on volume, breakout momentum out of a squeeze, relative strength and OBV are emerging. Guess Jeans, I don't know if they're just jeans, but Guess Inc. Nice little pattern breaking out. We looked at NetEase. Sally Beauty Holdings, way off of its highs. You can see how much it's fallen. But if retail does well, this is one that might go back up. Another thing I saw a lot of this weekend were the MLPs, which are dividend plays. And you can see Williams is one of them. So the nice thing about this scan is it brings up stocks right away that look interesting. American Eagle Outfitters, another retail. I don't know if earnings are out yet on this one or not. I don't like the shooting star, but I do love the nice pattern of an uptrend. Antero Midstream is another one of the MLPs. Kohl's has earnings this week, and they already look like they may have come out. So earnings may be out on Kohl's, but breaking out above the 200 after being down for quite some time. So I guess the message here is there are a lot of interesting looking stocks, even though the markets had a little bit of a run already. Now, I do create watch lists for me to the long and short side. I'm not going to show you anything short this week because I'm not going to do a lot of short trades until the market tells me to. AAOI is a low-cost semiconductor stock that's clearly breaking out here, as you can see. Cup handle breakout. Abercrombie & Fitch have earnings coming out, but man, what a beautiful stock this has been. If you look at the earnings projections for this stock and the growth projections, it's pretty darn impressive. So this is one that I might be looking at to see what happens after earnings. Arch is one of the many coal stocks. Coal stocks have pulled back in, but notice this thing broke out above its 50 this week. We've looked off and on at CCJ and the uranium stocks, which are in the midst of a nice move. CEIX is another coal stock. Looks like it's ready to run again. I've enjoyed that stock. DigitalOcean is one of these fallen angels. This was a great story stock. I mean, the stock was up to $126. Now, one would expect 200, which is about 20% higher, to be challenging. But I do like this pattern of moving up and one I'll be watching. I think we already looked at Gap. HCC we looked at last week as another one of these coal plays. And you could see it took out above its 50 on Tuesday as well. Lots of interesting stocks. IMGN, this is a biotech play that if I had to pick the next stock to get bought, it's by a big biotech play. It's this guy. They've got drugs on the market. They have what's called ADCs as a class of drugs. They're antibodies that are smart bombs with a poison that target the tumor. And I like this one as a takeout. Hub, an electrical company, one that had a big run up, pull back deeper than I like, but just broke out above the 50 with volume, breakout, momentum, relative strength, and OBV look good. A lot of these we've already looked at. I mentioned home builders a couple times. They scare me because rates are high and the market, even in South Florida, has slowed down. But what's interesting, really slowed down is people buying used houses because people aren't selling their houses. They don't want to take on big mortgages at high rates. But the home builders here are still making them. So Pulte made my list. And then how about Royal Caribbean Lines? This is another one that's in the midst of a big breakout and a big move, probably too far gone, although it's not extended by high jump. So a lot of stocks looked interesting, and some of my old favorites, Shopify, had a strong week after earnings. Look at that move after earnings, and a nice move from there. UUU, which is another uranium play, like Cameco. VIR Biotechnology, this is a bottom fishing, interesting stock. Look at this coming out of the squeeze, broke above the 50. And XBI is a biotech ETF, and this really defines the group. Beaten down, horribly beaten down. Let's flip this guy to a monthly chart. I mean, this was a $175 ETF. It's cut in half. Um, I just got the feeling that biotech's about to emerge. So, went through a lot of charts. I showed you my favorites based upon the CAT scan and then some of the things that are on my buy list. And since I have a few moments, let me just tell you what it means when I put it on my buy list. And don't get mad at me, it means nothing. It doesn't mean I'm buying it tomorrow. It means that I'm going to pick some of my favorites. I mean, one I picked a couple weeks ago was Palantir. And when I pick my favorites, I'm going to put some potential buy orders in because I'm long the market. But I will look at a stock. I will decide where it has to move for me to want to buy it. And I'll put a buy stop there. I'll immediately set a sell stop once I buy something. And I have a particular way of managing my positions. Why I'm telling you this is I will have a lot of stocks that I put orders in on, and very few of them will get filled because I will need them to trade into my buy stop. So just because I say it's a buy list doesn't mean I'm going to buy them all. It means I might work up a few, put them in as conditional orders, but it's what I'm going to be watching in the markets on Monday. So have a great week. This was relatively quick, probably because it's so late. I'm tired, and I'll see you at Stocks and Docs on Tuesday morning.